Application of the International Accounting Standard 2.
Currently, there are a large number of commercial and industrial companies which do not always have full control of their inventories because they do not apply the International Accounting Standard 2 on the current calculation of the cost of their inventories, valuation and control thereof. IAS 2 defines inventories as assets held to be sold in the normal course of business, those that are in the production process at the reporting date of the financial statements, and raw materials that subsequently form part of the finished products. By Dominguez 222. Current assets such as inventories are intended to generate profits in less than 12 months. Legal base. Number 1. International Accounting Standard 2 or 221 inventories. Number 2. Officialized International Accounting Standards IAS 221. And number 3. Business General Accounting Plan. Detail of International Accounting Standard 2. IM. Determine the guidelines for the accounting treatment of inventories. Scope. The standard applies to all inventories except financial instruments, biological assets, and works in progress. The standard is not applicable to the measurement of inventories held by producers of agricultural products, minerals, and intermediaries that trade these raw materials. Definitions. Inventories are assets held to be sold in the normal course of business, in the production process with a view of their sale, or in the form of materials or supplies that will be consumed in the production process or in the rendering of services. Net realizable value is the estimated sale price of an asset in the normal course of operation less the estimated cost to complete its production and those necessary to carry out a sale. Fair value is the price that will be received to sell an asset or paid to transfer a liability in an orderly transaction between market participants and the measurement date. Measurement. Inventories are measured at cost and net realizable value, whichever is lower. Inventory is cost. The cost of inventories will include all the costs derived from their acquisition, transformation, as well as other costs that have been incurred to get their current condition and location. Cost calculation. Specific identification. FIFO, first in and first out. Weighted average. Recognition as an expense. When inventories are sold, their book value will be recognized as an expense in the period in which the corresponding operating income is recognized. The amount of any reduction in value until reaching the net realizable value, as well as other losses in inventories, will be recognized in the period in which the reduction or loss occurs. Information to be disclosed in the financial statements. The accounting policies adopted for the measurement of inventories, including the cost formula that has been used, the total book value of the inventories, and the partial amounts according to the appropriate classification for the entity. The carrying amount of inventories carried at fair value less cost to sell. The amount of reversals in previous write-downs, which has been recognized as a reduction in the amount of inventory expense in the period. The amount of inventories recognized as spent during the period. The amount of write-down of inventories that has been recognized as an expense in the period. Conclusions. International Accounting Standard 2 has an accounting support in Element 2 of the PCGE, Realizable Assets, which contain the accounts related to merchandise, land, raw materials, among other related items. The information to be disclosed in the financial statements must be verifiable and true, that is close to reality and can be compared with other periods. The International Accounting Standard 2 is a guide to determine costs and their measurements to avoid errors that are not demonstrated in the reality of economic operations. International Accounting Standard 2 cannot be applied to financial instruments, biological assets, and works in progress as they are special cases with their respective standard to be used on them. The accounting treatment is different in the aforementioned cases.